Hey everybody, this is your main man Reg. We got our coffee here. It's good, and this is good as well. Today's segment is going to be about credit unions versus banks. We're going to look at these, and I'm going to explain the pros and cons of each, and then after that, proceed to explain how they affect credit. Okay, your credit unions are your nonprofit organizations that are typically member owned or and cooperative institutions. The the profits from a credit union are usually returned to their members, and they usually have a pretty high savings yield and a lower lending rate than banks. They can have a local or regional presence. Some examples of some credit unions are Alliance, Blue Federal, Consumers Credit Union, Wings Federal Credit Union, and Navy Federal Credit Union. The advantages of a credit union is that if you join it, you're a member. And so if you're a member, you're afforded certain privileges. An example of that is take Navy Federal Credit Union, for instance. You've got to be affiliated with the military in order to be part of that union, or you may have a teacher's credit union where you've got to be an educator to be a part of it. That's the best way I can explain that one. Your federally insured credit unions are backed by the U.S. government. So if you're part of one of those credit unions, that is a major advantage to that. Now, we talked about the advantages. Now let's talk about the disadvantages now. First disadvantage, a credit union may not be in your area. And if it's not in your area, whether if it's local or regional, it may not make sense to even bank there or do business there. But the caveat to that is a lot of your credit unions have the same online functions as banks. So it might be possible to join in one area and still continue to do business with them online. Your online banks may offer a higher annual percentage yield, but this is one of those things that you definitely want to take in consideration. On a savings account or a CD, the online bank might be more competitive than what a credit union can offer. So that's a disadvantage to that. And another disadvantage is you may not be eligible to be a member. So I know with certain credit unions, you have to meet certain criterion or be in a certain profession to be able to join. Next, we're going to talk about the banks. But first, the first one we're going to talk about is brick and mortar banks. They can be some of the largest in the country. And some examples of that would be Chase, CIT Bank, Wells Fargo, Citibank, Bank of America, USAA. The advantage to a brick and mortar bank is your location, and you actually have a person that you can go to as a bank teller to actually do business with. Now, a lot of your brick and mortar banks have a lot of the same functions online, but still people like the same personalized service. Some of the downsides to a brick and mortar bank is that the deposit rates are usually very low. So you're going to have a general. So some banks offer competitive annual percentage yields on savings accounts, checking accounts, and some, but it's going to vary from bank to bank. Another con is that going into a bank branch might rarely be necessary. So I mean, there are many people. Their bank might be in several states. I know when I was in the service, my bank, the bank that I did business with, was most of the time several states over. But phone call away, email, I can get on. I could get on their online portal and pretty much do everything I needed to do. Your brick and mortar bank sometimes will require high minimum balances or maintenance fees. So those are your larger banks. They may require that, and especially because if they handle a lot of accounts and handle a lot of services, and they're taking care of a lot of accounts, so they may charge those things as part of that. Or you got to have a certain amount to not get charged those things. So that can be a disadvantage with that. Your online banks, they generally don't operate as physical branches. So there's some pretty attractive things to your online banks. It attracts customers through competitive annual percentage yields on savings accounts, CDs, money market accounts, and so on. So that's a good thing. So your advantages: competitive annual percentage yields and a lot of times a fee-free experience. Most banks, if they can operate online, there's a lot of things that they can do that maybe an actual branch, a physical branch, cannot. So with that, they may not have to charge certain fees for different things. It's just something to think about. The disadvantages to an online bank is that if you don't have any physical locations, you don't have anybody to go to. No face-to-face meetings. That's another disadvantage. And your customer hours may not be 24/7. So it may be one of those situations where they may only have people available during certain times of the day, like during the business day, or for example, they may not have people in their call centers till maybe like 8, 9 in the morning until maybe like 7, 8 o'clock that evening. So we talked about credit unions, the pros and cons. Brick and mortar banks, its pros and cons. And online banks and its pros and cons. Now, let's talk about briefly how this affects credit. Now, your bank information doesn't necessarily show up on your credit report, and nor will it impact your score. But users, such as borrowers or lenders, more specifically your lenders, they can use the information about your checking account, your savings account, and your assets to get a good idea of your capacity to be able to take on more debt. So certain parts of it can tell lender if they can tell based off certain things whether you're high risk, medium risk, or low risk. So when applying for loans and credit cards, they'll first look at your score and your credit report, and they'll see if you'll have any open accounts, if you have any closed accounts, and payment histories. A lot of that stuff, they can be able to find that out. So they may not know bank balances or whatever, but they can tell if that account's been open for a long time. That gives them a good indicator. If there's been a good payment history, that's going to give them a good indicator. If that account has been closed, if too many accounts have been closed, that gives them a good indicator as well. Which a lot of times, if you have several closed accounts, knowingly or unknowingly, most people, it does affect their score. But everybody's credit file is different from person to person. But this is just something to bring up as it affects this. Also, they can tell how much credit is available to you. They can tell how much you're using. They can tell if anything has went to collections. They can find out if it's even a paid collection, and they can tell how many hard inquiries or soft inquiries on your account. Where a soft inquiry is basically a type of inquiry where they can look and see what your score is without it actually affecting your score. A hard inquiry, however, is one of those type of pulls where they go in and they pull your credit report, and it can affect your score. Too many hard inquiries can affect a person's score. Most of the time, it will lower it. Soft inquiry, usually it won't affect it at all, but that's the difference between the two. But they'll usually go back as far back as 2 years. So these are just things to look at. You got credit unions and banks. Now, I explained the two because that's going to help someone to be able to make a decision and be able to compare which one is going to be better for them. What I just explained was how the information within those accounts can help a lender make an assessment on how much credit that they're going to extend to you. That's pretty much all I can say about that in a nutshell. So, with that being said, this is your man Reg. I'm excited that you're a part of this, and don't forget to like, don't forget to subscribe, don't forget to share, and if you want to see more of these, they're definitely forthcoming. So take care of yourself, take care of each other, and have a good rest of the week. Hopefully we will see you next time. God bless. Take care.